Alrighty, today is Wednesday. It is 12:20. It is May 20th. June will start in roughly about 10 days. So I thought about this. I reflected upon the losses that I've incurred. Um, Recently, as like there was three prop challenge losses. One of them was a 10K, one of them was a 5K, and I borrowed money to buy the 10K and I lost that. So what's common between those three? I was at 7%. The first loss was small. Then in order for me to then my mind tilted and I attempted to get it back as fast as possible and I sized big. When I sized big, it took about 2.5%. And then in order to recover that, then I sized big again and I lost. Then I bought the 5K challenge. And then in order for me to in my mind, in my um essentially 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 I have perfected. I am a PhD in, yeah, I know it doesn't make any sense, but I have obtained a PhD in being a novice trader, a retail trader. I am the expert of. Okay, well, I suppose I can't say that, right? People who are profitable are the PhD of retail trading because they know what retail traders do. They are aware of it. So once they become aware of being a PhD of retail trading, then they become profitable. Okay, so you literally have to become a PhD in retail trading, uh, explore the details of being a retail trader, so that a person can avoid being a retail trader. And then finally, once that is achieved, such as that similar analogy of, well, uh, such as this analogy of doing something so many times, and then you finally realize that if I do that, then I'm gonna lose. And then finally, the pain and suffering of that causes me to deviate the pattern of behavior that makes me do that. Then I can do something else. Okay. So I looked at the commonality between these. Okay. So first of all, I've declared that I know how to trade, which is true. Okay. But mixed in with that, there's that emotion that causes a debilitation in my trading, undermines my trading, because if I make myself if I place myself in a situation where there's a landmine, okay, so if if I physically put myself in a situation where there could be a risk involved, okay? So if I have to go from point A to point B and there's like series of landmines that I don't even know about, okay? Why would I want to go through there when I can go somewhere some around it where I am certain that I won't experience that landmine, right? So then I thought, okay, so then I thought about so what I did was I see this reflects on a membership that I had with this group that I had. Okay, it's called the UK spread betting kind of a they're the group of people there, and and one thing that I learned from them, a couple of things. One of the things that I learned was to buy out Brooks. I learned that from them. The second part is this one of the moderators said trade small. Okay, trade small, trade small, right? Then I thought about, okay, so now recently I'm thinking about, okay, so what does that mean trading small? What does that mean trading small, right? So I'm exploring this. I want to explore it, and I want to make sure that I understand it. Okay, for myself, for my own sanity, I wanna explore it so that I understand it. Okay. Um, I wanna explore it so that I can understand it, and so that I can apply it in the future of my trading. Right. So I've already established that I know how to trade. But if I size too big, what it will do is, even if I know how to trade, it'll interfere with the progression that I'm making in my trading. Because what it will do is, I've seen this, I've seen this. So I would be correct. And so I would be going up, and I would enter here, and I have the trend right. But it would pull back such that, because my size is too big, the pullback literally destroys the gain that I have. Okay, but it'll still keep going up. But it's like it's in a channel. Okay. So I've already established that I know how to trade, which means that I have some techniques that I can use, employ to trade, which is correct, and I see it, and I can trade it that way. But what I've noticed is that my mind gets into a tilt, and what generally it does is that when I'm in tilt, what it will do is it'll cause me to trade big. Okay, when I trade big, that means the statistics of win to loss ratio, the average win and average loss, doesn't apply, because what it will do is, if I size big enough, what it will do is uh, one bad trade will essentially delete, will breach the challenge account. Okay, but it didn't register in my thick head. Okay, it didn't register into my mind. It didn't register in my mind that a single trade, okay, single the statistical trade that I have essentially is, I am correct 75% of the time. Okay, I am correct 75% of the time, and yet when I get into a tilting mode, what I would do is, I will size so big that one trade, I won't be able to survive that one trade if that trade goes against me, right? Right? But it just doesn't make any sense at all. Psychologically speaking, it doesn't make any sense at all. It's like I saw this YouTube video about this movie, about apparently this person, this I forget what the title is, but apparently the whole world is very dumb. And so when they did an IQ test, and so they ask a question to determine what their IQ is. Okay, and so one of the question is, what is 1 plus 1? Okay, and then the answer is 2. And so the main character said 2. And so after the tests were over, of very similar questions like that, then this person turned out to be the smartest man on that planet. Okay, so 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 essentially, Earth had evolved into a state where the smartest person, the hardest question that people solve is 1 plus 1 is equal to 2. And apparently, that's the hardest thing that you can do. Okay, and so what I've noticed about, and I'm not putting anybody down, because I am a retail trader. Okay, I'm a retail trader. Okay, and so what I'm doing is this. Okay, I already know. I've already said this. Okay, I said this to myself umpteen times. I said this to myself an umpteen times. Statistically speaking, my win to loss ratio is 75%. Okay? Okay, my win ratio is 75%. Okay? Win ratio. It's not a win to loss ratio. It's my win ratio is 75%, which means if I take 4 trades, I'm going to lose 1 and I'm going to win 3. Okay? I've already disclosed this. But I but what I did was, I discovered this a little bit late. Okay? I did discover this a little bit late. All right? Whereas the statistics was slowly moving up based on the loss size and the win size. Average wins and average loss. And this statistics was slowly being built up as the years progressed, as the days, months, and years progressed in my training. Okay. Then one day, like a few days ago, I started looking at the statistics, and what I've noticed is that this number was consistent. The 75% win ratio, okay, win rate was 75%, and the loss was bigger than my win average. Okay, those were consistent. Okay, and then and then and then I mean, this is something that nobody will tell you. Nobody will say it. Nobody will look at you and say, look, this is what you're doing. Okay, because this is making money. This is somebody making money. Okay, this is how you make money, and so nobody will tell you that. It's like the legal system. Nobody's going to give you free legal advice. Nobody, because it's a very, very expensive thing. It costs a lot of money. It costs a lot of money to get an education, and they expect a certain lifestyle to practice the discipline of law. And nobody's going to give you certain medical personalized information because they're in it. They want to make money, and it's a sophisticated niche market where people get paid very well to be a doctor. Okay. And these programmers, the software developers and things like that, they have acquired certain level of skill set to perform those things that allows them to be uniquely qualified for that specific with a high degree of pay. Such as these AI researchers who are at Meta. They're making, some people are making, they have $1 billion salary, right? Some people have $1 billion salary, right? And so trading is very similar to that. Nobody's going to look at my trading, and nobody's going to say that. But there will be a generalized statistical statistical results of what a retail trader does. Okay, the retail trader does, in my perspective, is this: what does the retail trader do? Okay, what does the what does the retail trader do? The retail trader does this. Okay, and I'm just gonna talk about the small portions of it, not all of it, because I am the retail trader. You are looking at a retail trader. I am a retail trader. I am you. If you're looking in the mirror and you're trying to figure out where the retail trader is, look at this, and I am the retail trader. I literally have a PhD. I actually have a PhD. Okay, I have a PhD in retail trading. Okay, I know it. That's the definition of being a retail trader. I've done this for 5.5 years and lost every time. That qualifies me as a PhD in retail trading. Okay? But those people who are profitable, they know who I am. And so they made that switch. Okay? Something that I don't do, or something that I stop doing, or whatever it is, to make that transition to be a profitable trader. Okay, so what these people who are consistently profitable traders they have a PhD in retail trading plus that extra certification in a consistency department, which allows them to be consistently profitable, right? So now I'm like, okay, tomorrow I'm gonna be paid. Okay, I'm gonna be paid. I'm gonna get a paycheck tomorrow. Okay. What I did was I bought a burger. Okay, because I was hungry. Okay, that burger is expensive. Okay, even with the discount, it's like two gallons. Okay, so what I do nowadays, because I'm a poor man, is that I equate the dollars that I have to the amount of gas that I can buy. Okay, in gallons. Okay, and so that burger cost me 2 gallons of gasoline, okay, that I can use. And each gallon probably gives me about 25 miles, okay, because my car probably gets about 25 miles per gallon. Maybe probably won't get to 30, even though it's a 4-cylinder. It won't get 30 miles per gallon. It won't. Okay, so it probably gets about 25 miles per gallon. And so if the trips back and forth is like that, maybe, I don't know. It takes a lot of fuel. Okay, it takes a lot of fuel to get from here to there and here. Right. So what I've noticed about so what I'm gonna do is tomorrow I will buy a challenge and then prepare for 1 day of trading. Okay, and this time I'm not gonna be trading big no matter what. Okay, even if I lose, I'm not gonna trade big. Okay, even if I win, I'm not gonna trade big, because when I win and I trade big, that is a formula for a disaster. I am aware of that situation. I have, I, and hopefully the behavior in trading will change at this point. Okay, so I saw the commonality of what size does to me, and size usually is invoked because I lost. Okay, because I lost the trade and I want to bring it back. But what that does, inevitably does, is it causes a greater amount of loss. Okay, and then it essentially causes me to be breached. And I'm doing these demos, and I'm seeing the exact same thing on the demo. Okay, it's no different. Okay, the only difference is that I'm paying for one, and this one I'm not paying. Okay, I'm not paying any money for this one, but the results are the same. Okay, so the commonality. So essentially, what I would equate this situation is this: I have a PhD in retail trading. Okay, so I am a retail trader PhD. Okay, I have a degree in I have a PhD in retail trading. Okay, that's me. Retail trading PhD. Okay, that's essentially it. But I'm not conscious of the full detail of, even though I am, because everybody is. Everybody who is not profitable has a PhD in retail trading. Okay, everybody has it. They're doing it. There's a specialty of doing it. Some people drag it on. Some people do it fast. Some people make a lot and lose it a lot. There's a different types of PhDs in retail trading. It happens. It always. Some people open up a family practice and lose like $100 billion overnight, kind of thing, right? That's similar to what retail trading is, right? So there is no argument, though. There's no discrepancy. It is irrefutable, okay, that I am truly a retail trader. Okay, I am. Okay, I am. Anybody, the first microsecond that the person starts trading is is indoctrinated into being a retail trader. And so I am a PhD in retail trading. Only when a person realizes what a retail trader is and makes the adjustments away from it can the person become profitable, okay, consistently profitable. So one of the ways that I've seen is observing what I've done in the past 3 challenges, okay, which I just blew it off. It was like $36, $66, $66. That's a lot of money. That's a lot of money for me. Other people, it's no big deal. It's not a lot of money. So they can afford to like take on like a 100K challenge and things like that, right? And they can blow that whatever they want to do. It's fine with them, okay? Because they are a PhD, okay? Retail trading PhDs. They are a retail trading PhD, okay? So then now I'm looking at the situation. What did I do? What did I do the last time that I cannot do? Okay, I must not do. Is something that I must not do is sizing big, because sizing big gets me into a horrendous situation. Even if I'm correct, I'm wrong, because what it will do is, even if I figure out what the trend is, what it will do is do this. And when the channel is wide enough, even if I'm correct and I'm up there, it's going to go to the other side, and because the size is too big, I'll lose. It's inevitable. That's how it happens. Okay. And so what I've noticed is that this. It's so crystal clear, blatant, and obvious, but I was not able to see it. Okay? I have, in most cases, nobody's like 100%. Nobody. Not too many people are 100% all the time. Nobody. Okay? There could be a sporadic situation where there could be a run, which is about 100%, right? So if they take 10 trades, 10 trades are correct. But in many of the instances, in most cases, it is possible to be correct 9 out of 10 times, or 8 out of 10 times, or maybe 7 out of 10 times. Okay? But being 100% correct all the time is very, very difficult for a long stretch of time. But on a short stretch of time, it's possible. Just like being poker, essentially a novice poker player could sit down with a professional, and then the novice can go all in on the first hand, and it's statistically possible that the novice player can win. Okay, because it's based on statistics. But as the time progresses, number of hands are played, the professional has a statistical advantage long term. Okay, so that means that in order for, because I know that I have a statistical advantage now, because I have built up an edge because I know where to trade. Okay, and if I see that trade, I can take that trade. But that still, it is only a statistical probability that I'm going to make money from that trade. Okay, even though it is highly likely, if I trade too big, that statistical probability will haunt me later on, because if I trade too big, there will be emotional consequences of the movements. That's one. Secondly, even if I'm right, the movement is unknown. The pullback is unknown, and when that pullback is unknown, a couple of those factors will cause issues in my trading. What I found out is that that's what happens, and so that is why for the past 1 year I was unable to duplicate the 5K payouts, because what I was doing is this. I had a taste of the payouts, and I wanted to get there as fast as I could. And the fastest way I could was to size big. And when I lose, I would get tilted because I wanted to get there so fast. And then when I lose, even it's a small amount, I would attempt to recoup it as fast as possible, and then size big, and then inevitably, the past 1 year, I've lost. Even though I know how to trade. But because of those two factors, sizing big and the psychology, it was causing me to lose. Okay? Those two factors were causing me to lose. And so the three challenges, which is the 10K and a 5K and a 10K, okay? And it was all exactly the same reason why, okay? I was too big. I got tilted. I got too big. I lost. Okay? Then the 5K, I just went big and I just lost. And then the third challenge, I wanted to get to 7%. I wanted to get to because I had 7%. And I had to get to 7%. And I just went big, and I lost. Okay? Because I had to get there so fast. Okay? So I saw this comment by one of the comments on my YouTube video. It says, "Slower is faster." Yeah, it is. It is faster, because I'm trying to get there fast by going big, but going there slow, smaller size, is faster, because I'm using the statistics to work on my side. Okay, I'm allowing the statistics, the thing that I built up, that allows me to be consistent on a stretch of trades. But if I trade 1 or 2 times, the market just whipsaw and take it away from me. Okay, I'm in my mind, I'm thinking, okay, so I want to pass this right now. Okay, but I can't do that, because when it does that, I could be under a severe. What I'm doing is I'm literally placing myself in a very difficult situation. Okay, outside the realm of my normal statistical probability of winning. Okay, that's why I'm losing. That's why I did that. And so what I need to do, and many traders know this. They know this. Okay, they know this. The people who have finally crossed over, they know this. Okay, but what I have to do is remain in that area, add things up to figure out, okay, this is what I did, this is what I did on a consistent basis, and this is why I'm there. Okay, so when I'm looking at the past trades, I'm thinking, okay, so that's why I lost. Okay, Well, let's figure this out. Okay, so if my trades are working well, it's giving me more time. So that should be an obvious, blatant fact. It's the truth. It works. If I trade small, if I see, here's the logic that it just doesn't sit in. Okay, the thick brain that I have, the thick skull that I have, is unable to fathom the concept of this very, very simple, blatant truth. Okay, if I trade small, my account will last longer. It's the fact. It's the truth. Okay? It is something that is looking at me, staring blankly at me and saying, okay, this is the truth. Do you see the truth? What is the truth? If I trade small, my account lasts longer. Duh, right? But it just never registers in my mind. At the moment, of the heat of the moment, when I'm all excited and I've been conditioned and the market has programmed me into a psychological position where I'm like trying to like this make work. The the addiction has rotted into my mind and is driving my mind. Okay, so what I need to do, and I need to make sure, I need to be constantly be aware of the fact is this, right? I need to trade small. Because trading small, even though it takes a little bit longer, it'll get there. It gets there. The reason why I'm able to, it's not a one big trade that gets me 3 or 4%. It is several of those safer trades that equates to, that falls into the statistical criteria of 75% win ratio. Okay, win rate. Right. So it finally dawned on me that's what I'm supposed to be doing. It finally dawned on me. So the people who are profitable, who are aware of the statistical So I mentioned this. Somebody was mentioning this. Somebody was mentioning this about statistical probability, and you have to trade with the statistics. Okay, you can't. It doesn't. When a single trade is there, you can't see the statistics. Okay, but the statistics is there. Okay, ultimately, when I make series like 100 trades, 25 trades will be wrong and 75 trades will be right. That's how it works. That's how the market works, right? So even the best setups, will not be 100% because something could come along. Certain unfavorable situation will cause that particular setup to be incorrect. Okay, 25% of the time, 10% of the time. But if I'm sized to the hilt on every trade, on that 10th trade, it will be within that statistical probability. And because I'm so big, I'm gonna lose it. Okay, but it doesn't register into my mind. It does not register into my mind that statistically speaking, okay, statistically speaking is this: if I trade big, I only have one chance. If I trade too big, I only have one chance. But if I trade small, but not too small, but if I trade small, I have multiple chances. I have the statistical probability chances. Let me state this again. Okay, so I know this is something that is so obvious, I just didn't understand it. Okay, I didn't understand this. Okay, here it is. If I trade too big, I only have one chance. I have to be 100% correct. Okay? All right? If I trade too big, I have just one chance. Okay, does that I'm programming my mind to understand what's going on. Okay? I'm programming my mind to understand what's really happening. Okay? If I trade too big, I have one chance. Does that make sense? Okay? This should literally be the this literally should be the a turning point in my trading career. Knowing this fact is this, okay? If I trade too big, I only have one chance. This is very, very important. If I trade too big, I have just one chance. Just one chance. If I trade too big, I have just one chance. Okay, I'm going to say it again. Okay, I'm going to say it again. This is very, very important. Because even though it's so simple, 1 plus 1 is equal to 2, there are apparently on this planet, nobody knows what that is. But this one person knows what it is because he's from a different planet Earth. Okay? So here's the math. Here's the consistently profitable trader math. Okay? The retail trader math is different than the consistently profitable trader math. Okay? The retail trader math is 1 is equal to infinity. But a consistently profitable trader math is only one chance. Okay? If you go too big, you only have one chance. Even though statistically, the best setup is probably about 85%. The best setup is probably between 80 and 90%. That means if anything goes wrong, okay? So if I take 10 trades, 9 out of 10 times it'll be right. But out of that one time, if I'm wrong, I'm too big. And I only have one chance. But if I have 10 chances, then statistically speaking, despite the fact that it varies, even though it's 9 out of 10 times, the variance of that statistics will fall within 7 to 9 or maybe 10 times. That's good. Which allows me to survive that trade and then make the right trade and then accumulate the gains based on numerous trades, but not one. This is very, 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 very important. This is something that as a retail trader that I looked at, and the 3 platform challenges that I threw away was because of that. And if I look back on all the other ones, it's precisely the same reason why. It is all the same reason why. Because the simple fact is this. If I trade small, I could hold on to that account for a month. But if I size too big, I can only hold on to that challenge just for one trade. And sometimes that one trade can be 1 minute. And so sometimes what I'll do is I'll trade it and I'll lose the challenge in 5 minutes. $66 gone in 5 minutes. It happened before, it'll repeat again. It is written in the Minority Report. Look at it. Look at the main reason. The reason why I wasn't able to see it is because I was mired in addiction of trading. I was so mesmerized by the dollar bills floating around in my mind. It was chemically infused with my brain in totality. It was embedded within my DNA. Okay, it was jiggling around and causing interruptions like the gremlin. Okay, a big size only gives you one chance. Small size gives you however many chances that I partition the risk that I have. This is truly the point where I finally so apparently so people will ask, okay, so At which point do you think you finally? At which point do you think you finally figured out how to trade? Okay, which what made you finally become profitable? Right. Okay. So I mentioned this in the past, but it seems like this is one of the things. There's a lot of things, but this seems to be one of the biggest ones. The ones that I mean, I lost thousands and thousands and thousands and thousands of dollars. I lost 5.5 years. Okay. I could have been profitable like 5 years ago had I known. Okay. But something so simple, I was unable to figure this out, which is this. If I which I keep seeing, and people see it, they know it. Okay. People who know how to trade, they know it. Okay. They know what's going on. Okay. They know what's going on. They know when they see what I'm doing. I tell them, hey, look, I breached the account. They know exactly why. Anytime you breach a challenge, it means that you size too big. That's it. It's one of those two things. Either you size too big or you don't have an edge. Those are the two things. Okay? But okay? Most likely what's happening is that those two things are happening, okay? Those two things are happening. Now, edge is going to be based on the strategy and the psychology part. But what complicates it is the size. The size gets to you. Okay, the size ruins everything. The size, because you only get one chance. That one chance. And the statistical probability diminishes when you're only trading one, because it makes it harder. So even with the same setup, that statistical probability is lowered. So your odds, the probability is lower. Okay? But it never registered into this thick skull until today. It never registered into my mind. It's amazing to me. Nobody says it. Some people drop a little hints. Okay, trade small. Okay, trade small like that. But psychologically speaking, that's what's happening. It's obvious. You just have to add things together to figure it out. Okay? If I trade too big, I only have one chance. Okay, I only have one chance. And then when I take that winning and I go again, I only have one chance. It's like, so I was, my ex-wife lives in Oregon. Okay, and so there's a lot of areas where you can gamble. So I was in this casino near where this Indian casino, and I was near where my ex-wife's family lived. And so I was driving through, and I stopped there. Okay, so I believe I took about $2 or whatever it is, and I put it on. I was playing blackjack, and so I won 16 times in a row. Okay, I won 16 somewhere around there, and the chip stack was this high. Okay, because every time I do is I'd win, I put it in, I win, I put it in, I win, I put it in. But I was successful 16 somewhere around there. Okay, I don't know how many times, but I won. But but the time that I lost all, because I put everything in there and I lost. That's what happens. That's literally what's happening. So statistically, this is something. Oh man, this is. I don't know why it took this long to figure this out for me. I don't understand it. The statistical data finally sledgehammered me into some sense. Okay, something just took a sledgehammer and goes bonk bonk bonk, and I finally got it, which is this. Okay, the reason why I was breaching, even though I had a winning strategy, but I was so big that the strategy that I had was attached with a statistical probability, a winning statistical probability, only if my size is in a moderate size. But if I size it too big, I only have one chance. And that one chance causes emotion. And that when emotion and also the fluctuations based on how it moves creates a complication and alters the statistical probability of that setup. And then when that happens, it diminishes the statistical probability. And when I lose, it erases my account at that instant. It essentially disables the account. Okay? But if I were to trade smaller, one of the things will happen, it'll give me more time to recuperate, or it'll allow me to execute my setup the way that I had built. So I have a PhD in retail trading. I have a retail trading PhD. Okay? The difference between me and a profitable trader is the profitable trader knows what a retail trading PhD is, and they have made adjustments, okay, to make themselves consistent.